Let's start off with specific roles of each regulatory body. BNM, or Bank Negara Malaysia, focuses on banking system and monetary stability. It also supports sukuk market and manages the Islamic interbank money market to ensure financial stability. Meanwhile, SC, or Securities Regulation Malaysia, is a capital regulator where it focuses on corporate and long-term sukuk. It also approves corporate bond and sukuk issues as well as regulates market conduct. In addition, it also established Sharia Advisory Council in 1996 for Islamic capital market. Let's dive into the differences between BNM and SC. As I said before, BNM focuses on monetary policy and banking stability. Meanwhile, SC focuses on capital market regulation. Other than that, BNM also uses short-term instruments, which is Islamic BNM notes, and SC uses long-term instruments, which is corporate sukuk. BNM Sharia roles is for Islamic finance, meanwhile SC is for Islamic capital market. BNM main goals is system liquidity and stability. On the other hand, SC main goal is market innovation and investor protection. Besides regulation, the Malaysian government's role as a sukuk issuer is the most important reason why the sukuk market has grown so strongly. The government issues Malaysia Government Investment Issues, or MGII, which act as a risk-free benchmark. So this benchmark helps private companies to price their own sukuk more accurately. So in 2022, Malaysia issued the world's first global sovereign sukuk, which showed strong government support and attracted international investors. Later, in 2021, the government also issued the first US dollar denominated sovereign sustainability sukuk, which was 1.3 billion US dollar, and it was heavily oversubscribed. This shows high investors' confidence. So by issuing sukuk regularly, the government ensures there is always high quality sukuk in the market, which improves liquidity and builds trust.
Over the past decades, Islamic finance has gained significant global prominence, with sukuk emerging as key instrument in capital market. Since 1990, the first corporate sukuk worth 1 to 5 million were issued in Malaysia by Shell MDS. The evolution of sukuk structure in Malaysia reflect changing market preferences and financial innovation. Early issuances were dominated by debt-based structures such as Baik Bithaman Ajil, before shifting towards list-based ijara, profit sharing, musyarakah and mudharabah, and later hybrid sukuk combine multiple Sharia contracts. Based on the pie chart above, it shows types of sukuk. In the early development, sukuk ijarah dominated issuance due to its simplicity and high level of Sharia acceptability. It is certificates of equal value that evidence invested undivided ownership in the leased asset, use of product or services together with the right to receive rental income. This structure provides predictable cash flow, strong asset linkage, and minimal Sharia ambiguity. For example, Malaysia's first corporate sukuk issued by Shell MDS relied on straightforward asset-based ijarah concept. As market confidence grew, Malaysia introduced profit and loss sharing sukuk. For example, sukuk mudharabah is a legal correlation between two parties where the capital provider, Rob Al-Mal, entrusts fund to a managing partner, Mudharib, who contributes expertise and management. Profit are shared according to an agreed ratio, while losses are borne solely by the Rob Al-Mal, unless arising from negligence by the Mudharib. In addition, sukuk musyarakah involve a partnership between two or more parties who jointly contribute capital to undertake a business venture. Profit and losses are shared according to an agreed ratio. This structure aligns with Sharia principle that discourage interest-based lending by promoting risk sharing and partnership. Lastly, hybrid sukuk combine elements of equity and debt, offering greater structural flexibility. Unlike earlier sukuk that rely on a single Sharia contract such as mudharabah or ijarah, hybrid sukuk integrate two or more Sharia compliance contract within a single structure. This approach allows the inclusion of both physical assets and Sharia compliant receivables or intangible assets, and in some cases grants holders the right to convert sukuk certificates into equity ownership of the issuer. For example, sukuk wakalah, where the issuer acts as an agent wakil to manage a diversified portfolio of Sharia compliant assets that may include ijarah asset, murabahah receivables, and musyarakah investment. The hybrid sukuk has reduced reliance on tangible assets, enhanced compatibility with global capital market, and increased appeal among sovereign and multinational issuers.
Assalamualaikum and good day. Today I will present one specific innovative sukuk, which is green sukuk, the world's first RMB climate sukuk launched in Malaysia at the Global Islamic Finance Forum GIFF 2025. Innovative sukuk are Sharia compliant instruments that go beyond traditional financing by introducing new structure or objective. This sukuk combines Islamic finance, climate finance, and international currency diversification. It is issued in 2025 by Unity Group Holdings International and Tax Securities under Labuan IBFC framework. It is raised RMB 200 million, becoming the first climate-focused sukuk denominated in renminbi. So the purpose is to fund a low-carbon energy-efficient project, especially ESG lighting and energy-saving initiative, which is also generate verified carbon credits. for the structure, it is Sharia compliance with the investor return derived from the project cash flow and carbon credit monetization rather than the interest, with a regular profit payment and the principal repayment at the maturity. This sukuk considered innovative because first, it is the world's first climate sukuk issued in RMB, which is the China's currency. In Malaysia, sukuk are usually issued in ringgit or US dollar. By using RMB, it attracts Chinese and regional investors and help Malaysia connect Islamic finance with the wider ASEAN market. Second, it has a clear climate purpose. Unlike normal sukuk that can be used for many types of projects, while this sukuk can only be used for environmentally friendly and low carbon projects. Third, it include carbon credits. The project financed by this sukuk reduce carbon emission and generate carbon credits, which can be monetized. This linked to financial returns and environmental impact, which is very new in sukuk markets. Finally, the sukuk strongly support ESG and sustainability goals. It shows that Islamic finance is not only about profit, but also about protecting the environmental, which fits the objective of Sharia. From a Sharia perspective, the sukuk avoids riba as the returns are not interest-based. It also minimizes borrow through a clear asset linkage and project transparency, and it avoids maisir by being tied to real economic and environmental activities. The sukuk was presented and endorsed within Malaysia's established Sharia governance framework. Economically, the sukuk benefit issuer by attracting green and ethical investor, while the investor gain stable Sharia compliant returns with a positive climate impact.
Next, I am Nurhanisa and I'll be presenting the strategic roadmap for Malaysia to lead the global sukuk market. The first area that Malaysia should focus on is to enhance the global regulatory and Sharia harmonization. This basically means making the sukuk rules more consistent across countries in order to ease the issuing and investing activities. First, Malaysia can strengthen global harmonization by initiating an international Sharia and Sukuk Standard Council. One of the ways is to start a technical forum within existing bodies, such as the Islamic Financial Service Board. This is where regulators and Sharia scholars discuss common sukuk issues and share best practices. This approach is realistic because it avoids undermining national Sharia authority while still encouraging convergence. In addition, Malaysia can promote mutual recognition of Sharia approvals. This means a sukuk structure approved in one jurisdiction, such as Malaysia, may be recognized in other markets without full reassessment. Other than that, mutual recognition can also reduce the application and lower the issuing costs. Next, the second strategy is to standardize global sukuk documents by developing voluntary model sukuk documents, including standard contracts and disclosure templates. This document provides issuers with ready-to-use frameworks which helps reducing legal complexity and Sharia uncertainty. To encourage adoption, Malaysia can tie these standards to market incentives such as faster regulatory approvals, lower issuance fees, or easier listing requirements. This creates a strong commercial motivation for issuers to adopt standardized practices without regulatory coercion.
Next, to sustain its leadership in the global sukuk market over the next decade, Malaysia must strategically develop new markets by introducing specialized sukuk structures aligned with evolving global financing needs. First and foremost, sukuk should help to finance many significant sectors such as infrastructure. Malaysia can deepen its presence in the social and infrastructure development market using sukuk istiqna and sukuk social. The adaptability of sukuk will bring many benefits to and social well-being to the country. It can be utilized for the improvement of public facilities like airport, highway, bus station, and so numerous projects for improvement of the country through public-private partnership. This aligns Islamic finance with social objective and strengthens Malaysia's leadership in sukuk issuance. Secondly, developing the small-medium enterprise SME and halal industry market through musyarakah and mudarabah sukuk would open new growth market. This profit and loss sharing sukuk are well suited for SME and startups that lack access to conventional capital markets. Offering smaller denomination on sukuk can attract domestic and regional investors while supporting inclusive economic growth. Next, Malaysia should expand into the sustainable and climate finance market through the issuance of green and sustainability-linked sukuk, which is ijarah and wakalah. With growing global demand for ESG-compliant investments, this sukuk can be used to finance eco-friendly projects such as construction of solar power plants and funding of the infrastructure of green buildings. By strengthening its green sukuk framework and exporting regulatory expertise, Malaysia can position itself as the global hub for Islamic sustainable finance. Lastly, Malaysia should pioneer the digital and retail investment market through tokenized sukuk based on wakalah or murabahah structures. By leveraging blockchain and financial technology, sukuk can be issued in fractional units, improving accessibility for retail and international investors. This innovation would broaden the investor base and enhance global market liquidity.